Okay, thank you for the introduction. My name is Choong. I'm emeritus professor. Actually, I'm retired a few months ago, but I'm participating in many works right now here. I'm going to speak something on the fintech and financial market or financial integration of ASEAN. At the same time, two more speakers will say something on AI on financial market. At the same time, the tokenization impact of the financial market. Those are the relatively new topics, and so they want to introduce some new technology and how it was implemented in the financial market and what was the impact on the financial market too. So we're going to have, at this time, the time is 2:43, so we only have 14 minutes. I'm going to go in a hurry. So first thing I like to say on my topic is fintech and ASEAN financial market, digital financial market network here. I'm going to use my slide. Please show my slide first. Okay, this is the ASEAN fintech and payment network. So what I like to say is the introduction and the current state of digital payment in ASEAN. I'm going to say something on the ASEAN payment network, which is relatively new one. And finally, I give the conclusion here. It is true that a recent achievement of the ASEAN market is that each ASEAN member state has installed and applied some of the new technology in financial market and fintech, for example here, so that cash payment is substantially reduced. That's fact here. People in ASEAN member states use the card and mobile phone, any other methods. And also QR payment is very popular. How about the regional network here? Unfortunately, it's a relatively new concept and is not widely used. So that I'm going to say how the recent developed technology can be used to enforce the new network here. So here's the old days is we use the cashes. People go to market and use the cashes or coin. We have used this for 1,000 years. About 400 years ago, somebody invented an institution, we called it bank. And people push the money in the bank, we called it deposit account. Using the number in the deposit account, people can trade, use a transaction here. So we give maybe some check or any other method we provide to the merchant here, then merchant will use this throughout the bank, the payment is completed. The bank was the key institution to provide the payment services. And digital case is a little different. Everything is same except that we use card or mobile devices instead of using maybe paper checks. So it is the same here. So digital payment introduced around maybe year 2000 or before that here. Okay, payment system is made by the retail services and wholesale services. The wholesale services is made the transaction between central bankers and commercial bank so that it makes a transaction of the large amount of money or relatively small number of the payment here. A retail payment is the use. People use it every day here. When you go to the market, when you go to the maybe barber shop, we use whenever you pay it, and we called it retail payment here. The wholesale payment system used the electronic methods for almost 10 years ago here. But you see the RTGS system was introduced in most of the ASEAN member states except one country. So we say that those kind of system is used. So that we can say that here digital payment was used in the wholesale payment system. However, in the retail case, it's a little different here. It should take care of the millions of transactions every day. Therefore, we have to use a more advanced technology so that it was installed and used and for past 10 years. So we have, as we see here, different countries with a different system. But we can say that here, although it looks different, but principle is the same. The technology is a little different, but principle is the same. What about why your retail payment has improved the past 10 years? Maybe this is the say that why the wholesale was the first and retail was the next. retail is a relatively more expensive one because it has to take care of the millions of data every day, every minute here. And also, it also depends on the whole social system because it's the people to use. The people living in Indonesia may be different from the people living in Vietnam, so that they have a different custom to use the payment system, different way of doing their businesses. Therefore, it takes some time. However, currently here, in degree of usages across the ASEAN, a little different, but big difference. But I said that it was used quite, widely here. So the digital economy and payment and settlement system is made by three things. So we have e-payment system, and e-commerce system, and maybe e-business system. Currently, if you like to have a digital economy, we must have a digital or e-payment or fintech system here. And if you like to have, we must have a hardware system. For example, every merchant have a kind of devices. At the same time, every people must have some devices, and all these should be connected, and there must be the central bankers to watch it, and then also supervisors to do it, and also hardware and software should be installed. Lots of things should be done. Fortunately, past 10 years it was done. So that we have system, we have people to use it. So here the internet users of ASEAN member states. As you see here, most of the countries is above 50, and some countries is above 90s, which means that people are used to use the internet. It's a quite revolutionary changes compared with those numbers in 10 years ago. So that also ICT industry provide many different services like shopping mall, like here. Each country has this kind of shopping mall, and people use it every day. And users, for example, merchants have some devices to have, also people like to have. At the same time, pandemic is a very sad thing, but fortunately, it provides the opportunity. People used the digital devices. That's true here. Right. Here's a digital economy in the global world. The people who buy something, maybe people who make something in different countries, more complicated system should be used. I, J, K, L, and also some product is made by K, people living in I countries, and more complicated system is needed. Actually, my presentation is that this is a time to use this system, and today here. Okay. So here's a main principle. ASEAN regional payment connectivity initially was endorsed in ASEAN Summit meeting in 2023. And we have a digital payment network across ASEAN. It was announced here. These are the major principles. First of all, it should be faster and convenient. And it should use the existing system. If you like to reduce the cost, we have to use the current system. And also, we have to have inclusive growth and expansion. We have to include the future development. These are the four principles suggested by the ASEAN Summit meeting in 2023. Based on this system, wholesale sales will be relatively easy because it is only related to a few number of banks and central bank. Therefore, it can be done relatively easily here. The problem is the multilateral, systematic retail system. We have to have this. It's a very complicated system here. So that the economy of the all countries are integrated fully, then it's easy, but it is not here. A development stage of ASEAN payment system is different from country to country. That's true here. Different kind of systems are used in countries. Some countries use a card more, some countries use mobile phone more, some countries use a QR code more. So all of the systems are different. The question is how to harmonize these things across the ASEAN here. Here's surprisingly, there are some example cases here. As you see here, there are ASEAN 10 countries and Korea, China, and Japan. And recently, Bank of Indonesia and Bank of Korea has an agreement on how to connect the QR payment system. It should be done in the early of the next year. I'm trying to say is that here already there are some bilateral system already built among the commercial bank and central bank in some of the ASEAN member countries. That is called bilateral system. So my suggestion is that it's very difficult to connect all the maybe retail payment to the one system in the harmonized thing, it's almost impossible. However, we do have a kind of system like QR payment system, which is QR connected by country to country among the people here. We already have some of the bilateral system. We can extend the thing. There can be a milestone for the future development. It may be a small step, but it can be a milestone for the future here. That's my suggestion here. Bilateral QR payment network means standardization of the contract method between users' mobile phone and device of merchant in some countries who are the member of this bilateral contract. So major mechanism is similar to the previous e-payment network here, and also it's using a netting system. Therefore, risk of this transaction is relatively small when it across the border. Why the QR payment network in ASEAN have made for past years is, and is promising in the future, as you see, it's by the market driven. Because each member state, people begin to use it and the merchant to use it. Commercial bank was included, therefore system was developed in all countries. But each member country has developed by its own method. The next thing is how to connect this one here. And technology used the standard one. Actually, the QR system was developed in early 1990s in Toyota automobile company. So it's about more than 30 years old technology. However, it is very secure. Therefore, relatively, the technology is standardized one. At the same time, cost is relatively cheap. So we can use it here. Why QR network in ASEAN made for the past years is, and also users like me here, when I use the QR payment, don't pay any extra money. Relatively easy one, relatively and also costless one. So it has a lot of advantage here. Okay, so let's talking to the implication of buyer payment network in ASEAN. It can be the first maybe retail network among the ASEAN. So how can you do that? We can have some example. Let's go back to the clock to the 2008. This is a time when I make a presentation about maybe 20 years ago in ASEAN Man. And there was so we call it Chiang Mai initiative here. The financial, right here. There was a currency swap agreement was called Chiang Mai initiative, which was introduced in 1999 ASEAN+3 Finance Minister meeting in Chiang Mai. At that time, the simple idea was this: if Central Bank of the ASEAN+3 countries maybe give us currency swap agreement, we can have extra currency, maybe foreign exchange reserve, that we can prevent to having a currency crisis. That's a very simple idea. And also, it was based on the ASEAN Currency Swap Agreement, which was began in 1977. So it relatively go to the old days from the 1997, 1999. But when 10+3 countries make a currency swap agreement, it became relatively very, very complicated. As you see here, this is a currency swap agreement of the bilateral one in 2008. So you see, it's very, very complicated. Which means that 10 central bankers are 13 central bankers of ASEAN+3 are pretty busy. Every month they have to meet another central bank and make a swap agreement. So technically it's not sustainable. So around 2008, the idea was how to make it institutionalized. So that we make currency swap agreement multilateral, and we have AMLOs at the time. So that 2011, we have currency swap agreement multilateral, and as a result, the AMLO, as you see here, was created here. So these are the things that ASEAN cases, we begin with a small one, a bilateral one, and as times go by, we have more necessity to make it and build up further. Finally, we get multilateral one, institutionalized one here. So my suggestion is that Chiang Mai initiative may be the same cases. We have a QR agreement, bilateral one. We're going to extend it further and further. We can have institutionalized, and we can have a small QR network in ASEAN. That's the first retail agreement, retail payment network in ASEAN here. Then next, we're going to have a further and further. Maybe not only for this QR system, simple one, agreement can be made, and its system can be better here. Right. So the benefit, the people of ASEAN member states may use it across the ASEAN+3, and cost is not much. already bilateral was installed, the central banker or maybe commercial bank don't have to pay extra money here. We can have just connecting services. But, and also it did not break the current payment network here. And also however, it takes time to build a formal multilateral system. If you like to have a system, there must be some authority who manage this. But unfortunately, we don't have such a management system. Therefore, we have to have a new institution who take care of this thing, and it should be a formal one, with a member of the central bankers or member of a financial stability authority, or it can be here. But before that, we have to have a study. What kind of retail payment exists? What kind of thing can be done by QR payment across the ASEAN plus 3 countries? Fortunately, we already have bilateral network. We can utilize those things here. And right. So here's my conclusion here. ASEAN has improved efficiency of the payment system for the past decade. Absolutely true here. Now is the time to integrate it in a more convenient way. So the QR network can be the one of the small milestone can be done because already something was done here. So the many countries are already adapted here. So if it can be extended to a multilateral one, it can be one of the model to integrate it retail payment system in ASEAN or ASEAN plus 3 framework. And still, right here. It's like we can have example cases, currency swap agreement, which was done in around the early 2000s here. So we already have some example. We have a bilateral system. Why not we do it? So we can do it in a thing. Okay, this is my presentation. I think that some of you make an intuition from this and try to work hard to have a multilateral, maybe QR system in next 5 years later or 10 years later. Okay, thank you very much. Okay, now I have finished my one here. We have next one, 2 more prominent speakers. First one is Mr. Sean Bae. He's the head of a private service of Korean market of Jefferies HA, which is in Hong Kong here. He flew from Hong Kong all the way to Indonesia here. He'll say something of the AI, how the artificial intelligence was applied in financial market and the bank, in particular in the trading and everything. Okay, Mr. Bae, this is your turn.
Hello, everyone. I'm Sean, and I'm not a developer. I'm not an expert of the IT AI, but I can tell I'm the activist user of AI in my firm. And my previous background for a few US banks for the last 10 years. So we are using a lot, and it helps a lot. So I think afterwards, I think other people here, you can apply that logic into your firm or bank. I'm sure you will do it. So I want to talk about where we are and how we can apply and how we're gonna enhance it in your day-to-day life. So my journey to systematic trading started like 13 years ago. So one of my colleagues from France, he told me, hey, Sean, do you know Python? So I told him, hey, what is that? I don't have any pad. And yeah, so someone is laughing, right? So it sounds like a snake, but it was a programming language. So I adapted this coding in my day-to-day reporting life, and it evolved my day-to-day. Visualization, everything was amazing. And a few years later, he introduced me another book, which is machine learning. So the technique is different. Python is more like a data analytics. As I said, it's generating a report and visualization. But data science, we use machine learning AI, which is what we're going to talk about. And the latest book, Advances in Financial Machine Learning, that's something I can recommend to you, and it helped me a lot. And yeah, data science, the goal is predicting future outcomes. It's not generating report, it's prediction. So this is where I'm using. So the next slide, when you're looking at the left chart, it's like very complicated. There's a lot of nodes, and yeah, it could be a rocket science. But today I'm not going to talk about these kind of details, and I'm trying to simplify the details of the fundamental of the AI. So at the bottom there's a number 21, 30, 45, 6, 60. So we call it as a data. So it means nothing, just number. It's a data, and we can add some more context here. So we can tell it weight. Someone is 21K, 30K, 45K, and the next. So we do some interpretation. So we can read and we can interpretate. This is the weight under 100. So this is going to be knowledge. And the final step, wisdom. So we use machine learning AI, and we can compare with this number versus any market research data, so we can judge based on this kind of number versus the market data. So this is just the fundamental. And I can add some more details here. So today I'm going to talk about the AI, right? So AI is broad concept. So it's the superset of the machine learning data, deep learning, and a bunch of other things. And machine learning subset AI. So as I said, it's exceeding the capabilities of the human's brain. And infer, so read all the information from other sources may not be explicitly stated. So we can discover some information from the data. The previous sample was the good example, right? It was just number, but it can be a weight, and we can find some research based on that number. And machine learning, so we actively use from the 2010. So prediction, and we spotting the outliers. So today we are here for the digital banking. So we talk about a lot of some issue, security, fraud, and the machine learning. We can help this kind of vulnerability. For example, so machine learning is spotting some outlier. So we are looking at some pattern, and we can find out some outlier, and we can, so I can give an example, right? So Mr. Sean, he normally using his credit card in Hong Kong, but suddenly he is spending in Egypt, and then that kind of some outlier is picking up by the system in the credit card company, and it will be flagged to the credit card officer, and he is sending a message or email to Mr. Sean, and hey, Sean, are you in Egypt? We see the credit card record from the Egypt. Is it what you are really using? So this is kind of the example. So we can find the outlier here. So machine learning, we can use it kind of the cybersecurities. So this is the last step of the AI. So deep learning subset machine learning, and a fundamental model subsetting the deep learning. So deep learning is literally deep, means there's a lot of some different layers. So it's more like a neural networks. So we simulate and mimic the way the human brain works. It's more like a brain. So the machine can learning with some different layers, and he can judge by himself. And a fundamental model is literally like a fundamental model is all part of the generative AIs. So I think this is the last step of the most. So when we are looking at the old YouTube, a lot of some tech guys are talking about the genetic AI and AI agent. So this is what we have at the moment. So language learning model. So all of the bank app, we are using the chatbot. So the chatbot is based on the LLM. And so this is kind of the big issue at the moment. So a lot of kids are overusing the deepfakes. So this is by the generative AI. And agentic AI, so this is the mostly actively using my day-to-day. And the machine can judge by himself and suggest some direction to human being. So why AI matter? So when I look into some kind of approach, something new, I'm trying to find some white papers. So Professor Darren from the MIT, so simple macroeconomics of AI. You don't need to read it through everything. So I'm sure you all have ChatGPT or Copilot or Gemini 3. Just trying to find and ask him to summarize it. So the key point here is it's going to be incremental gains in specific area, not overall in economies. So impacting selective sectors rather than all industries. And task-based productivity model. So it thinks productivity gains to the fraction of task improved and cost saving per task. And all the AI task improvements, AI advancements focus on the easy to learn task rather than complex task force. And sector allocation, financial service will adopt AI for fraud detection, risk modeling, and automation. But again, macro gains will be limited. And so this is one of the major part as well. AI benefits will accrue mainly to capital owner, not widening inequality. So yeah, so when I read through, it will be selective, not every economy. But banks, why it matter? We can see the next slide. So we always talking about the numbers in bank, right? So we can talk about the value, potential value from this kind of product. So especially, so when you're looking at we have 3 different cube. The first one, deep blue, is the value of potential is high, and light blue is low. So the biggest part is product R&D. So when back in like 10 years ago, there was a lot of coder behind me. So I need to ask, I just told them, this is my language, can you put it in the code? But that kind of things is replaced now. I can put it in my code. Hey, this is my back data. Can you write this kind of code? It's happening right away within like 1 minute, boom. And also custom operations. So as I said, so a lot of banks already adopted this kind of functionality. So we can reduce any fraud and those kind of situation here. In marketing, also, so I'm sure most of the people already experienced. So early next year is a tax season. So when I just check some like tax interest on HSBC or CD app, the next day I'm getting some email from the CD and HSBC. Hey, do you need a tax loan? And the next week, I'm trying to get a monthly rate for my saving. I was just clicking some apps, and the next day I keep adding that kind of some marketing information as well. So commercial bank, they are actually using those kind of function AI, and we are expecting the productivity of 2.8 to 4.7% of the industry annual revenues, and which is additional 200 billion and 340 billions, which is not small. And let's go for more details. So from the Darren's white paper, you remember that it will start with easy to learn task force. So the value created by AI at stake by segment, when you're looking at the retail banking, so it's already 300, they're expecting around 300 billion, which is compared to the capital market and asset management, relatively super big. So my interpretation here is it seems like some complex job at the IB and asset management side. It will take some time, but from the retail side, it's easy to start. So they already started, and expecting the value is quite big. Yeah, so speaking of digital innovation, but we need to tool. How are we gonna apply this? How are we gonna enhance it? And I see a lot of cases already applied here, and I think everything is very common. So I know we are running out of time, so I'm not gonna mention all the details. And this is my day today. So at the investment bank, we already applied everything. So when I turn on my PC, every morning it says, "Good morning, Sean, how can I help?" And it projects all the AI P&L projection, and yeah, so this is quite different. So from the user cases in IB side, so my alumni, my friends, they spend a lot of time to do some valuation modeling job, but they don't need to hire those kind of juniors for this role. So once they have some specific info factors for the modeling, the AI is generating all the details. And in this case, we use machine learning. And another part is using the GenAI. So we have a client meeting with hedge fund client or other firms, and we input the notes, and the machine is interpreting those kind of details and generating the plan. They send it in my Outlook. And equity research. So based on the hedge fund client's portfolio, so the machine is inputting all the newly released research paper into the salesperson and a trader. So easy to understand those kind of new release. And on top of that, they summarize everything. So I don't need to look into everything. I don't need to ask my junior to summarize everything. And equity trading, so we input all the data portfolio, and the machine is generating the details, and it helps to predict the volume and the price, everything. So it's really helped to optimize our P&L. And yeah, so this is my area, quite complicated, but systematic sales and trading, we use AI a lot. Yeah, so when we take into account those kind of new product and a new system, we always need to consider the relevant risk as well. So I know this is quite, I'm not sure I can go through all the details, but we need to think about the data privacy, right? As I said, in bank, they use my tracking they're using my tracking record, and they're using its marketing. So this kind of issue is quite important to measure. And transparency. So we said that we are using GenAI, but I'm not sure which is how accurate or not. So this kind of accountability and transparency, we need to think about it before we adopt it. Yeah, so last page. So I want to compare with personal computer and internet and AI. And when we are comparing the 40% adoption time, personal computer, it took 12 years. Internet, 5 years. AI, 2 years. Even my 70 years daddy my father is using for AI as well. So it's very close. It's already here. And there's a lot of noises on the workforce impact. So when we are talking about the internet, internet helped to create another new roles. But AI, there's a lot of noises. Call center, they can be easily replaced by AI. Do you think there's only good things regarding the AI? So this is very controversial, but yeah, so it's already happening, but really fast. So we talk about all the digital banking all day today, but how? So my recommendation is just think about what I mentioned the fundamental of AI, and I'm sure it will it's gonna be your differentiator, game changer, empowering your differentiator with actionable data and comprehensive risk oversight. Thank you.
Okay, it's a very nice opportunity to learn something on the AI. Okay, this is the last presentation of the last section. Is Mr. Manhee Kim. He's a Vice President of Agency of Security Finance and JP Morgan Hong Kong. He also came from the Hong Kong. Okay, the time is yours.
Hi, good afternoon, everyone. Thanks for hosting the event. ASEAN-ROK FCC, OJK, and AMRO for the event. Selamat sore, Bapak Ibu. datang di sini hari ini saya emosinya seperti yang pulang ke rumah. Waktu saya anak kecil saya tinggal di sini 10 tahun lalu. So it's very good to be here again. Just feel like back home here after a few years back. So today I'd like to focus on how tokenization is transforming the mobilization of global collateral pools and what this means for the future of the financial markets. So from that aspect, I'd like to talk about how this impacts the area of the specific field where I'm coming from, so securities finance. So in recent years, the financial markets has been actively exploring the distributed ledger technology, or DLT. So I'm pretty sure that a lot of you hear about it, and then we echo my predecessors, like to the speakers we talk about. So, and there's a lot of a talk on how to deliver the services and in terms of tokenizing the financial assets. So we're not currently today we're seeing the tokenization move from the proof of concept to the more of a commercial use cases. So according to the IOCS latest reports, commercial interest of tokenization is rising, but widespread of adoption is still very limited. So we think that efficiency gains are uneven, and many market participants still rely on the traditional infrastructure for trading and post-trade services. So there are structural challenges to the scaling, such as like lack of interoperability across the different blockchains, and also the absence of a credible the settlements assets. So today I'd like to discuss about the benefits and efficiencies created by the tokenizations and the regulatory and legal challenges, and as well as what is needed from the move of a proof of concept to the commercial use case, commercial adoption. So let's imagine a world with just one ledger. This is going to be a perfect world where asset money, central bank money, and all the financial assets are seamlessly integrated. But in reality, we are still far away from it. For the architecture community, the challenge is to develop the standards that allow different types of money and assets to it interact seamlessly. So on the picture in front of you, if you look at the left table, we look at the current state of collateral management. So especially confined to the securities lending. So today, securities lending requires market settlements across the brokers and banks, and this leads to the settlement risk and the delays. So both parties face the operational complexities as well as the resource overheads to manage the loans and the collaterals lags. And borrowers often have to pre-fund the collaterals, impacting the intraday liquidity, as well as the credit consumption while waiting for the loan settlement. So these are some of the challenges here today. And to manage the exposures and mitigate the transaction risk, and borrowers often have to hold excess buffers. And this increases the unnecessary pre-fundings. On your right table, there's the benefits of tokenization. It offers a fundamentally different approach. So with DLT, we can achieve instantaneous settlement without relying on the market settlement windows. So assets can be lent or returned while remaining at the brokers and banks, and this reduces the fiscal movements and reconciliation. So today, in the financial structure-wise, FX market, capital markets, the funding market itself requires of a lot of government fundings. So for example, the US Treasury, 70% of the treasuries get booked and traded during the APEC hours, whereas only 30% or 40% are traded on US hours. So with the DLT technology and with the tokenizations, once this technology becomes realized, instantaneous booking and trading and post-trading can be done within the APEC hours, and treasuries can be settled in the US hours. Everything can be traded and settled during the APEC hours instead of waiting for the Fed market to open. So we think that there's the smart contracts can also automate the operational processes, such as the margin calls or transactions, and this reduces the requirements to requires the further down on the needed to manual intervention and errors. So I think the Gradle settlement precisions means collateral pre-funding requirements can be significantly reduced, and this open up the mobilization of the collaterals, the need to needed for the borrowers or brokers and banks to more pre-fundings, and unlocks the liquidity in the market that can be used elsewhere. So I think the implications here are very significant. So tokenization can enhance the efficiency by reducing the frictions and the cost and improve the risk management with the real-time visibility and control. And this unlocked the new business model for cross-border transactions as well as the innovative products. So, however, just like any other innovative products, there are still challenges today. So technology is evolving very rapidly, and there are many ways to adopt the same object. So we don't know how the landscape will like in 3 to 5 years, but for example, even digital money comes in various forms, tokenized deposits, regulated stable coins, and so on and on. So I think it's important for industry participants to work together and to address the issues and enable broader adoption of a tokenization in financial markets. Let me share a few practical examples to illustrate the potential impacts here. So in the repo markets, as you can see from the chart, so tokenization allows the instantaneous settlements, and this requires the instantaneous transfer of collaterals, and also reduces the market failures in transactions, and also it freed up the capitals. So from your chart on the left is the traditional models where it's subject to the traditional markets settlements. So for example, today on your left, you see the 2 arrows here that requires the market settlement outside of the brokers and banks. This is off the blockchain. So from the lending accounts to the borrower securities accounts at the CSD, and another transaction requires on the tri-party account. So you already see two movements here. 10, 20 years ago, market settlement was like T+10. Now it's like T+1, and we're talking about T+1 cycle. So on your right is the example of the future stated tokenized collateral networks, where everything can be instantaneous. So today, a lot of we see examples of a native financial asset that transacted in just speed of a few seconds. So there's no market movements, it's just books and records. So we believe that technology is still there, but it's just a matter of whether the market is ready to adopt the new technology. So as you can see from the right charts, the market cycle starts from the lender accounts, go to the tokenization accounts. So the process of the tokenization, so after the process of tokenization of the financial assets, then it's just books and records. And that's where we see the opportunities in the market. So it's worth noting that the broader benefits of a tokenization, such as 24/7 market access, fractionalization of the access, and immutability, programmability, and these features can open up the new opportunity for investors and institutions, so making financial markets more inclusive and more dynamic. But with innovation comes with a responsibility. So as we move forward, it's crucial to ensure that tokenization does not just introduce the financial stability, but market integrity or operation resilience. So I think the harmonization of the industry market altogether, whether this is the regulators, central banks, or fintechs, brokers and banks, traditional legacy systems, I think everyone has to just work together to develop the robust frameworks and promote the interoperability and maintain high standards of customer protections. So I think in conclusion, so tokenization has a lot of potential to deliver real efficiency gains and transform how we manage the collateral liquidity today. There's a journey of a proof of a concept to commercial reality is underway, and lessons we learned today will, of course, shape the future of the financial market. So I think the collaboration, innovations, and responsible developments, we can unlock the full potential of the tokenizations and build more efficient, resilient, and inclusive financial system. With that, thank you for listening.
Okay. I think it's 3:30 right now, so we are a little behind the schedule, but it's not our fault. We already been late at the beginning. So we will say one questions for each guys, and before that I get submit questions from you, the audience and other people say ask questions here. First question about my topic was how to institutionalize of this QR ASEAN Digital Network or something like that here. And it was 2010, ASEAN central bankers has some working group. We called it ASEAN Working Group on Payment and Settlement. And they regularly met and make some agreement, and they made across the process. But unfortunately, the progress is relatively very slow. Because that's the job of the central bank. You know, central bankers are always slow. They are always the last person to adapt to the new technology. We know that here. But already, you know, private sector already do something, and bilateral something is going on. Therefore, I think that it's time for they are going to move. You know, and we don't need them here. It is impossible. I said there somebody should be done. I'll say like here's AMLO. You have to make a working paper. Other institutions make an agreement or that. And a lot of people has to claim that we need new system. Then eventually something will be born. I think that some central bankers should be the center of that. Unfortunately, one of the things is Bank Indonesia or Ojaka is one of the institutions who tried to initiate this system for the overseas because, you know, population of Indonesia is so big. At the same time, many Indonesian migration workers are working all around the ASEAN member states. Therefore, Indonesia's BI is willing to do this kind of job. So that I think it's a BI maybe try to do more to have institutionalize the system, or we call it QR network system, and across the ASEAN. Maybe it can be further extended to be a more bigger one, but it can be a small step, but it can be a bigger one in the future. So these are the question and answer provided by me and, you know, other audiences. The second question is about Mr. Bai here, and also he's talking about the AI. And so whenever people talking about the AI, they always say that here how the AI will replace the human workers is. So substitutionability of the AI to the workers is how was the workers in the banking sector, finance sector will be done. That's one of the questions is that here. And second question I say is how was the performance, the trading of the AI? Is it outperformance to human traders or maybe market traders? This is a thing I like to ask you two questions.
So I can come back with your second question. So it's very clear. So when you talk about the Citadel, Jane Street, or the systematic client, or the market maker, their revenue is quite similar with all the big giant IB banks, just like JP Morgan and Morgan Stanley, which is very clear. So my daddy's generation, they focus on the fundamental long short based on the research paper and a corporate action event. But all the systematic flow is way bigger than previous trading strategy, I think. So for me, yes, there's a lot of some noises, but I think better than human beings' judgment, the system suggestion, system knowledge, and that kind of portfolio and a trading strategy is already better than human being. Yeah. Yeah. So I just talked about a little bit at my presentation, right? So a lot of people saw the news. There's a big layoff at the big US big tech company. So do you think this is a problem? So as I said, this is very controversial. But we need to think about it. When you buy stock, what kind of company do you buy? Very obvious, right? Some company who reduce the cost and expecting the revenue is higher than previous quarter or something. And at this point, I also want to talk about ESG as well. So we developed all the Gen AI and agentic AI and AI agent in the trading firm or bank or other firm, but we improved efficiency, productivity. And then previous task force we shouldn't let them go. We need to allocate another role. That's my suggestion. But yeah, so my long story short, all the AI, I think it helps improve productivity and efficiency. But senior management level, we need to take care of employer. Yeah.
Okay, thank you. Sorry, Mr. Kim here. Here's a question provided by the audience. Say that what are the key challenges that people, I mean, the industry or the company try to address the tokenization? I mean, you said that tokenization will improve the efficiency in thing. What the company has to do to implement the tokenization in all their maybe traded and will their account like that?
Yeah, thanks for the question. So there's a lot of the adoption of the tokenization brings a lot of the efficiency, operational, less of the frictions, and it even broadens up the more business model for the brokers and banks and the traditional companies and fintechs, etc. But I think with the new technologies, requires the challenges. So here we think that there's 3 challenges here. So first will be the regulatory challenges. So today, this cross-jurisdictional regulations lacks the definition of what it really means to be digitalized assets. And once this gets transacted through the either safekeep, custody, traded. So I think there's still uncertainties in terms of the definition of the jurisdictional laws in terms of that. So I think once we get defined and there's more clarity onto it, and I think there will be a much more advancement on the technology front. Second one is the more important. This is the fragmentalization. So today we have an on-chain blockchain, off-chain blockchains, ledger technologies, on the node or not. But I think in the end stage, a lot of the technology out there is under the not public chain, but it's on the private blockchain. So with permission blockchain like JP Morgan Connexus, HSBC Orions, MAS, or HKMA, whatever you call it. So I think the importance is the interoperability across this blockchain. So these blockchains need to speak to each other. So in the end, there should be bridges into it. So I think here is the route where the traditional legacy system and the new route on the tokenization framework has to work together. This will be like a hybrid in the long terms. Well, it could be just like a booming of the internet. It could just happen in next 35 years, but it's not sure how this will. But I think collaboration, harmonization across the industry participant is very needed in here. And I think third is the operational complexity and technological complexity as well. But here we have already a very innovative, the operational complexity that is being built and required, such as customer protections, settlements, and fundings and margin costs, and all the infrastructure that has been required for the legacy system will also be required for the new technologies. So I think it will be a gradual development. So I think industry in the end stage will just take the hybrid models to adopt the new technology and then continue to use the existing until we get to the end stage to make everything's, either you call it tokenized, stablecoin, and crypto. Yeah.
So this is my question on to you. You say that tokenization, the example of tokenization, you give some payment and delivery services done instantly here. How about the LLM, large language model here? I think that it also can be done by the tokenization, how to utilize the text message to the numbers and analyze the credit risk, and everything can be done by the tokenization, which you don't mention it. So I'd like you to explain more on this.
Sorry, what's the question?
LLM, large language model here.
Oh, yes. So first step on let me give you an example. Like for Tesla, they have the FSD. So I think the first step is to, make the highway. So I just make analogies of building a highway for tokenization. So after that will be a smart contract where it comes with the automation, LLM. So once you have that highway, I think the next stage will be just building automated infrastructures. Let the mobiles run itself automatically. But until then, we still have the traditional financial assets that's non-native, and we have also new technologies bringing in, like fintech side, where there's a native assets that's sitting on the tokenized itself already. So I think so. First step will be just like just like we're just making a broad highway, and then and using the smart contracts and using the LLM technologies, the system will run itself. So yeah, I think that's the end stage we're looking for.
So almost time's up. So that it is. I think I finished my job here. I try to explain everything what I have and he had, and we all three try to do best to explain what we have here. This is the end of the last session, and I hope you enjoyed this thing. Thank you very much.